let's talk about the euro. Let's talk about what's going on with the euro. Euro was at 133 yesterday. It seemed like almost nothing could touch it. A little different today, right?
Yes, we saw some profit taking place during Asian hours, and then when the European session started, it stabilised until about noontime London hours, that is, when we got news of one of the coalition minority partners not wanting to sign up to the bailout agreement, and that knocked a bit of the confidence out of the market, because it reminded investors of the continuing risks still out there in terms of the potential for a Greek default further down the road if spending cuts and a bailout aren't agreed. And we know that there is a parliamentary vote due on Sunday, and we're looking for approval of the agreement that the Greek leaders reached. And even though the votes from the minority Laos party were in danger, that it still nonetheless made people a bit nervous.
So William, we've over the last several weeks or month or so, we've heard a lot about high short interest, a lot of shorts in the euro, and it seems as if there's been more and more short covering. Is there still a lot more left to go there, or has that pretty much been wound up?
It's difficult to say. I was speaking to one strategist in Europe today. One of them was of the opinion that the euro was beginning to perhaps form a base around these levels, ahead of a potential climb higher, as a result of a lot of those shorts being unwound. But there is no loss of other commentators in the markets who think that because of the longer-term uncertainties that still surround the whole issue of the eurozone debt crisis, that won't change in the not too distant future.
Yeah, that's a good point, William. I think on both sides of the Atlantic, there's been a lot of complacency lately. You can see it in the stock market here in the U.S. You can see it in the euro. Do you think that mindset might start changing a little bit, seeing what we're going on in Greece here, and the idea that Portugal, Ireland, and a lot of other people are going to come to the table looking for redone deals?
Well, I'd say 2 points there. On the one hand, it was quite instructive that yields on Portuguese government bonds have tightened in quite a bit. There was a report today that the German finance minister was overheard on video suggesting to his Portuguese counterpart that there might be room to adjust the Portuguese bailout once the Greek situation is out of the way, at least in the short term. And the second point I'd make is that to some extent the refinancing operations of the ECB have acted as a bit of a game changer by ring-fencing the contagion concerns surrounding the European banking system and flushing the banking system with tons of liquidity. It does seem to have changed the overall mood. And of course, we've got another long-term refinancing operation coming up on February 29.